Hi friends, how are you all? So welcome back. So today we are going to go into the one of the most important things we should always keep in mind with regards to accounting. But before that, we have studied a few things. That is, we studied the concept of dual aspect. Right. Now tell me, what are those aspects? I never told you that, and you never asked me. Huh? Okay, what is the aspect? When I am giving money to somebody, what is the aspect? He is receiving and I am giving. Right. He is receiving and I am giving. Some benefits is transferred from one way to another. Any person who is receiving or the receiving aspect of any transaction is called debit. And the giving aspect or donor aspect is called credit. Okay, receiving aspect is called debit and giving aspect is called credit. Hope you are all clear now. Okay, now actually I wanted this doubt from somebody. Okay, so we have studied what are the two aspects in accounting. So now tell me, is there any sort of person or thing that will always have the receiving aspect? Is there any sort of thing that will always have the giving aspect? So in order to know that, we will have to go to our system of accounting. That is, we studied the three processes: recording, classifying and summarizing. Recording, it will happen, okay, for before that, we need to classify the transactions also. Recording will happen with respect to the golden rules, which we will discuss later. Now, so how do we tell receiving and giving aspect? Is there something that has only receiving aspect? Might be, there will be. Don't you think? Actually, in traditional accounting, all accounts are groups of transaction. Okay, if I am maintaining my account and Ram is somebody else, outside person, all the transactions I do with Ram will be classified in his account. Okay, that the thing that arises out of classification of transaction is called an account. So accounts can be divided into three. Okay, three are real, personal, nominal. And what should be debit? What is the real, what is personal, and what is nominal? See, real accounts are things that are in physical existence, not human body. All non-living things that are in existence. It can be a machinery, it can be a house, it can be a building, it can be clothes, it can be anything that is in real existence. Okay, such a thing is called a real account. Any account we maintain for such things are called real aspects. Now, what should be debit and what should be credit? Whenever a real object comes into my possession, I will debit. Okay, debit comes in. Okay, whenever a real object goes out, I will credit that object. I will remove that object from the debit. Okay, so the first rule is debit what comes in, credit what goes out. Debit what comes in, credit what goes out. It is for real object. If I buy a machinery, I write that machinery as debit. If I pay cash, I write that cash as credit because machinery is coming in and the cash is going out. Alright. So now for real. Personal, it means persons, people. If Ram is another person, Ram is a personal account for me. Okay. Ram is a personal account for me. So what I do is, here I write debit the receiver and credit the giver. If I give money to Ram, I will Ram will be the debit and I will be the credit. Okay, if I am making my account, if I am making my account, if I am giving things to Ram, if I am giving cash to Ram, Ram is the receiver and I am debiting him, and cash is going out. Cash is a real object, so I will credit the cash. We will learn more about it in accounting process, but just know about this. Nominal. If the thing is neither real or nominal, nor personal. Say purchase. Purchase of a thing. You purchase something. That thing will be real, but that transaction of purchase is not a real. The purchase is a nominal thing. Sale. Okay, you are making a sale, and what your sales amount is going up, right? That sale is a nominal item. If you tell to somebody, if you sell things to somebody, that somebody is a personal item. Okay, that somebody will be personal, but the thing that sale, if somebody asks you your total sales, then this is the nominal thing that you should see. You should never see the thing of personal. Okay, sales are nominal. So, debit all expenses and losses and credit all incomes and gains. This is the third rule. Now, it is a traditional system in which we are discussing these three rules. Debit the receiver, debit what comes in, credit what goes out. Debit the receiver, credit the giver. Debit all expenses and losses and credit all incomes and gains. Okay, we will discuss the technical aspect. Whenever we do purchase, it is an expense or it's an expense, right? So we will debit. Whenever we do a sale, it is the gain, it is an income, so we will credit the sale. So what happens here? First, we will summarize as the modern system. Okay, first we will see the capital. Okay, what will happen in case of capital? Debit, credit. Credit and debit. First thing is capital. What is capital? Capital is the money brought in by the owner to the business, right? Whenever capital comes in, what happens? Cash comes in, cash comes in, cash comes in. But what happens? This owner, it is not thing, it is a person. He is giving us, so that will be credit. Whenever cap comes in, it will be credit. Whenever capital goes up, it will be credit. Whenever the owner withdraws capital from his contribution, this will be debited. This is capital. Then asset. Asset, you have said real object. When it increases, it will be debited. When it goes out, it will be credited. Then liability. Liability, what happens? It is the obligation of our enterprise to somebody else. Right? It is the obligation of our enterprise to somebody else. That person will be, when we are giving, that person will be debited. But when we are giving him money, okay, we have taken loan from somebody, okay, I have taken loan from Ram, and if I am giving him back this money, so what will happen? Okay, first take when we are giving the loan. When he is giving me loan, this person is the giver, right? So he should be credited. Debit the receiver, credit the giver. He should be credited. So whenever liability goes up, it should be credited. But whenever I am paying it back, he is receiving. He is the person, he is receiving, and therefore I will debit him. So whenever liabilities go down, they should be debited. Now expenses. Expenses, whenever they go up, they should be debited. Whenever they go down, expenses will never go down. But we can conventionally say if an expense is nullified. I will tell you how this can happen. You are selling goods to somebody and he is returning the goods to you. Okay, when you are selling or take the case of expense, you are purchasing goods from somebody and you feel those goods are not up to the mark and you're returning that back to him. So what happens here, this expense that you have done earlier is being brought down or nullified. So that will be credited. Similarly, revenue or income, credit all incomes and gains. So this will be debited, this will be credited and this will be debited. Similarly, what will be the debit? Whenever you sell some goods to somebody and he feels it is not up to the mark and he is returning the goods back to you, then that should be debited. Okay, this is the basic summary of what these things are, and this is the what the modern system says. Okay, but now tell me, you are making an expense of 1000 rupees to buy goods. Now you are making expense of rupees, or you say 10,000 to buy goods. See, again you are making a goods of purchase of 10,000 to buy a machinery. Is there any difference between the both are purchases, right? And they have to be treated as expenses, right? And what is the difference? This good that you are buying, when you have processed and when you have sold, it is over. But this machinery will help you to produce more and more and more goods for a very long period of time. Okay, definitely longer than 1 year, right? So this is an expense, but this is an asset, right? This is an asset. But consider some business enterprise. It is formed in order to manufacture a particular item for the period of 1 year. After 1 year, this item will be gone. This enterprise will be closed. So what will happen? Whether he buys goods or machinery, it is not going to be useful for him more than 1 year. So what to do? You will treat it as different and you will say this machinery will give me more benefit. I am not going to do any business. It will give me benefit. What benefit? Nothing. So here we need to discuss a concept that is called going concern. Whenever we make accounts of any enterprise, we assume that this enterprise will be in existence for a very long period of time. Very long period of time. So what happens? Only then we can consider this as good and this as asset. Otherwise, if this enterprise will be dissolved in within this 12 months, then we will never consider this both things as different, because whatever happens with respect to those will never give us any other benefit. Okay, so there are two conditions by which required to classify something as an asset. Okay, two conditions to classify something as an asset. What are those? The first one will be future economic benefit. That's what I told you. It should give you economic benefits not alone in this year, but it should also give you a benefit in the future. And the second thing is you should own the asset. These are the two conditions to classify something as an asset. If either of these is not there, then it will be treated as an expense. Right? Got it? If either of these conditions is not met, then it will be treated as an expense. If both these conditions are met, then it will be treated as an asset. Okay, so now tell me something. Goods, you are buying it as a good, it's an expense. But some goods will remain at your stock at the year end. What to do with that? You own that goods. Yes, there is ownership. Will it offer future economic benefit? Yes, it will offer future economic benefit, so it will be treated as an asset. It will offer future economic benefit, and hence the closing amount of goods you have will be treated as an asset. So I hope you understood the points of the two aspects: the going concern assumption, the golden rule, and the classification of asset. So this will be with this lecture. We will meet again in this next lecture. We have more concepts to discuss there. So till then, have a great time. Bye bye.